Hey guys, Chris Wong. I'm filming this video as of November 19th, 2024, and I'd like to talk about experiencing a second margin call again. So as a disclaimer, I'm not a financial advisor. I'm just a guy interested in building a portfolio. So I experienced a second margin call on Questrade because my buying power went below zero. And the biggest reason why my buying power went below zero was because I just got charged the monthly margin interest. So this morning when I checked my emails and logged into my Questrade brokerage account, I saw that I had a margin call of like $40. So it was just a simple $40 deposit, but I actually deposit more than that, and I actually deposit into my TFSA because my margin account is linked to my TFSA as collateral. So after the margin call was settled and my buying power came back to be able to purchase stuff, I actually just purchased a few shares on my Questrade TFSA. So I would say gaining a second margin call, I actually didn't fear having a call at all. I didn't have any stress about it at all. And I think it has to do with because I've already experienced having a margin call once before, and I already contacted customer service to clarify my questions. And then my Questrade portfolio, everything I have in my account is all based on high yield dividend paying ETFs that are based on indexes with a few yield max single stock ETFs. And because everything I pick is 30% margin requirement, and I do admit I did max up my margin to the point that my buying power is quite low, I also balanced it out with inverse ETFs by YieldMax as well, just in the event that if the Nasdaq went down, then some of the inverse ones like YQQQ will go up, or if Coinbase goes down, then FIAT will go up as well. I'm not recommending you guys to max up your margin. It's just something I did for myself. It was the choice I made. I actually currently have a full-time job, and I also have another brokerage account with Wealthsimple. And actually my Wealthsimple account is my primary investing account because it's linked to my Wealthsimple cash, and I use that account to pay my bills regularly. Because of the amount of time I've been an investor, I've been investing for more than 3 years without using margin, and I would say about 4 months using margin. So I actually got to experience many mistakes, and I had the amount of time to experience accumulating dividends every single month and eventually every week. So my portfolio was built by consistent investing of my work income and by all the reinvestments of dividends. So even if I did experience a margin call and I had to sell some shares, it may be selling shares of the amount of reinvested dividends in order to settle a margin call. So even though I did settle a margin call of $40 today, it is possible I could get another margin call on Thursday or Friday because I'm not making any more modifications to my account as of now. And Thursday or Friday is the ex-dividend date for the weekly ETFs like YMAX, YMAG, QQQY, WDTE, and even the Roundhill ETFs. So if the temporary drop in the share price because of ex-dividend date happens, and if it puts me into a margin call, I could always sell YQQQ in order to settle the call, or I can take a chance and try to wait until Monday and see if the dividends that I will get can actually pay down the margin or pay off the margin call. And the last reason why I don't fear a margin call anymore is because I can always sell shares to try and increase my buying power and to get out margin if I want to. Now, if there was a market crash, that may not have been a good time to try to get out of margin, but I can always try to buy or sell in order to determine how much margin I want to use or if I want to get out of margin. So investing, whether using margin or not using margin, it's life. It's life for me, because for me to live my lifestyle, I'd rather be an investor. And when I'm talking about not fearing a margin call anymore, it's only for this type of investing. If it's any other type of investing on margin, I would fear it because I actually don't understand the other types of investing, like investing for growth or investing for single stocks. I actually only understand investing for monthly dividend ETFs or weekly dividend ETFs that are most likely based on indexes. So in the future going forward, am I going to change my approach to investing? I may consider just trying not to buy any more shares in the meantime and let the dividends try to pay down the margin. And let's see if I can pay down the margin and try to increase my buying power that way. Otherwise, the other approach is just sell some shares and increase my buying power. Now that's if I want to try to have as much buying power available. And if I was to try to retire early, or if I want to try to withdraw more money from my margin account on a regular basis, then I would want to have more buying power available. And I would have to probably take an approach of being patient to get a lot more dividends as time goes on, or just sell some shares of either some of the ETFs I have that are based on the indexes, or even sell some inverse ETFs if I have to, just depending on the market conditions. I hope you guys liked the video. If you liked the video, please give me a thumbs up. Otherwise, please subscribe to my channel for future videos. Thank you guys for watching.